welcome to our 2 cents. We deep dive into the new payment frontier and explore how blockchain is reshaping global finance. So this is Hazel, your host today.
This is Ivy, co-host of our 2 cents.
So today we have Philip Montes, the co-founder and CEO of Kravata, a Latin America-based crypto-as-a-service B2B payments company with its headquarters in Colombia. Hi, Philip.
Hey, Hazel. Hey, Ivy. How are you?
Yeah, I'm good. So since it's our first episode in English, I suggest we start with a brief introduction. So one by one first and say hi to our audience. So we can start with Philip.
Yeah, so thank you very much for the invitation. I am Felipe Montes. I am co-founder and CEO of Kravata. I have been in crypto since 2013, and I have done 4 things in my life. I hold a PhD in complexity science, have been a tenured professor in analytics and information systems, have been a consultant for governments and companies, also have been Deputy Minister of Education in Colombia and Director of Quality Assurance for Higher Education in the country. And since 2018, I started my first crypto venture, and Kravata is my second one. So thank you.
Wow, that's a lot of things, So thanks, Philip. And next, Ivy.
Hey, this is Ivy. I work as a growth manager for Latin America region at a new bank called Infinity. And previously, I worked for a venture capital on post-investment side or on Web3. So my journey to payment track started 2 years ago when I met a group of friends from Latin, Turkey, and South Africa. So I see how stablecoin play a role as a financial Prometheus to bring financial liberty. And cannot wait to communicate with Philippe from Kravata about the insights on Latin fintech.
Okay, thank you, Ivy. So next come to me. So my name is Hazel. I now work as a marketing advisor at a ZK infra company named the Delphinus Lab. And I'm also the member of a public goods donation fund named GCC. And I used to be a journalist back in China. So I think that explains most why I started this channel with Ivy, because that's what I'm passionate about, to talk to the sharpest minds in this crypto payment industry and to record these exciting revolutions. And we're still very small. It's almost our day one, but we will grow up to be the best crypto payment podcast in this industry one day. So let's get started. So, Philip, before we get into your product, I'd love to set a stage for our audience. So you're based in Colombia. It's a place so far away from China. It takes over, I think, 30 hours, to plane to get there. So I get most of our listeners have never set foot in Latin America. So let's start with the big picture. What do payments look like in Colombia? What are the most popular payment tools that companies use in their daily life in Colombia?
Sure. So Colombia is a 48 million persons population, but for example, we have more than 50% of the people unbanked. So there is a lot of cash around the country. And also we have more and more digital wallets that are coming to the space. So people can pay and open accounts only with their phone number. So there are some well-known like Nequi, DaviPlata, which belong to the biggest banks. And we also have, and growing by far as being the most used payment method. There is also something called PSE, which is belongs to the ACH group, which is similar to the US. We have an ACH association between the banks. And this payment system allows for doing real-time payments. Nevertheless, they are only for cash-ins, but not for cash-outs. So now, right now, this is handling around 32% of the e-commerce payments. The penetration of credit cards is low, less than 10%, and actually that's the trend in Latin America, not only in Colombia. But we do have debit cards. And there is also right now a new initiative from the government to have a real payments system, which is called Breve. So this is the new project that is launching soon, and it will be very interesting because it will do settlements in real time between the banks. So the payments both for cash in and cash out can be instant payments. So this is how Colombia stands. We also have QR codes, mobile wallets, as I mentioned you, but a lot of cash, these mobile wallets, and some parts, a third of the transaction like digitalized by these payment gateways.
Yeah, I can see a lot of, room for innovation here. And I also remember you mentioned in your previous interview that the very important fact that Latin American people are holding stable coins is to not just for payment, but also for like hedge against the currency depreciation, right? So I've never been to Colombia, but I've traveled one thing in the Argentina. I know Ivy is also like paying attention to Bolivia, and I still remember how the face of the local notes is. It's very big, and there's a big gap between the black market exchange rate and the official exchange rate against the US dollars. So can you tell us more about the stories about this, the wages, the costs, and the depreciation of the currency?
So one thing you need to take into account in the whole Latin American market is that our financial systems are fragmented. That means each country has its own financial system with its own KYC rules. So our countries are non-interoperable themselves. We don't hold liquidity, for example, between Chile pesos and Colombian pesos. We do need to go to the US to convert to dollars and then convert back to the other country. So that means, for example, that for a normal transaction, I will say an example, Chile, Colombia, you will need to do Chile pesos dollar to a correspondent bank in the US, a wire through SWIFT, then correspondent bank to the other correspondent bank of the Colombian bank in the US, then you do the FX to Colombian pesos. So one reason why stable coins have been adopted is because you can do this in two steps. Just you on-ramp from Chile pesos in this example to a stable, then you off-ramp again with local liquidity to Colombian pesos. This is one of the main reasons we have seen this adoption. The other one is, as you mentioned, Hazel, if you take a look, for example, in 2014, Colombian pesos costed $1 was 2,000 Colombian pesos. Right now, $1 is 4,170 Colombian pesos. So the depreciation in 10 years is more than 50% of the currency. So basically, people need some alternatives to hedge against this depreciation. And in our countries, we don't have dollar accounts. So basically, on-ramping into stables like DAI, USDT, USDC, or digital dollars, like we call them here, might help to do that without going. The only way you can do dollar purchase now here is to go to an exchange place and buy cash. So the problem with cash is usability, because you buy your dollars in cash, but you cannot spend them here.
Mm-hmm.
You need to go to the US or whatever country they receive that and spend them there. With stable coins, you can send into another person, or you can off-ramp again easily. So that is dominating the market. And the last thing that you mentioned that I think it's important, this is Colombia in particular. We have a lot of inflows of dollars because of our exports and because we have Colombians sending remittances to the country. So that means that we have more offer of dollars than demand in the country. So the way we settle that is with the government that needs to pay the external debt, etc. But that's only when the dollars arrive through the banks, through the official channels. But there is also the other dollars flowing around in cash that also come from remittances and exports that they don't have this settlement. So basically the price of the dollar if you to an exchange place is 2-3% lower than if you buy it in the bank. So it's like the opposite of the kimchi premium in the opposite. There you have a more expensive, here you have a cheaper dollar. So there is a whole market of people doing crypto arbitrage because they can buy the stable coins in the peer-to-peer on under the price and then off-ramp them. So they buy for USDT, they go to an exchange in the US or in Europe or in Asia, they swap it for a dollar, and then they SWIFT back this dollar through an official channel. So there is the difference after cost should be around 1-2%. And there is people doing that every day.
Understand. Interesting game. Just to get a bit more information, like you mentioned, like $1 is 4,000 pesos. I mean, what's the price there? I mean, how can I buy with 4,000 pesos in Colombia?
So it's in $1 is 4,000 pesos in the rate, but you can think about $1 as 1,000 pesos in the purchase power. So if you are in the US and the coffee costs $5, here you can buy a coffee with 5,000 pesos. But like these the small cities, is still true. In the big cities in Colombia, they are already getting some gentrification because they are already getting foreigners. So the prices are getting up, and we are not having that purchase power. So, for example, if you look at the Big Mac, which is some index that uses, a Big Mac can cost here in Colombia like maybe say $6. It's $5. $5 a Big Mac. So you can give a sense on the difference between the other countries. The minimum wage here, it's around $400, which is very low. And if you make more than $4,000 per month, you are in the top 1% of the wealthiest persons in the country. So, but at the time, you have one of the most happy nations in the world. I don't know if you have seen the happy curves that are GDP versus happiness. So Colombia is one in the where the GDP is not so high, but we have a lot of happiness. So we are one of the seven most unequal. We're the seventh most unequal economy in the world, but we do a lot of in the country.
Got it. Hear that? I mean, at least we have happiness. I know if we have any problems about the
Yeah, I just want to call back a little bit about the arbitrage behaviors in Latin. It's very and one of my friends we are working with closely those days. He asking me a solution for like easy transfer from US bank to Chinese bank because he's doing arbitrage. He's sending stable coin to convert to US dollar and send to US bank and send to Chinese bank, and after Circle he can make money from this whole process. Yeah, I feel like it's a super common phenomenon. And beside that, I want to call back to the depreciation. In terms of depreciation, so outside of Colombia, what's your observation regarding the currency depreciation across different Latin markets?
Oh, it's very similar. Of course, you have countries like Ecuador that is dollarized, so you don't have depreciation. You have El Salvador also, which is dollarized. So, but Uruguay is a small country. They are more wealthy. They are smaller, so they can control everything easier. But for example, if you take Argentina, Argentina has faced more than 276% of annual inflation in 2023. So basically, it's very, very high. You take Venezuela, they also had, actually, we don't even have official data on how the economy behaves in Venezuela, but in Venezuela, basically now people is not using too much the board, like they are seeing a lot of ways of using dollar. So one way is, for example, to use US bank accounts from people that Venezuelans that aren't that lend them their accounts so they can pay between them with Zelle in Venezuela, or they are using stables to settle or dollar cash. So depreciation is very bad there. Mexico, for example, which is a stronger economy, and Brazil, they have depreciation also, but it will be around 20 something percent in the last 10 years. So being Mexico a little bit more depreciated than real. So it's common, the depreciation. COVID also impacted a lot our economies. So that also has to do with that. And also that the governments had to print money to survive COVID. So that's obviously related to this problem. In all the cases, but the majority of the cases like Colombia, Mexico, Brazil, Chile. So yeah, I think that, yeah, but it's a common trend. So here, dollar is seen as an asset where you can hedge, when you can save. It's more like gold, a little bit,
Mhm.
but of course with more usability. The problem is that if you can only have access to dollars in cash, it's almost like having gold because you cannot use them. If it's digitalized with the stables, for example, then you can use them. So it's more interesting for people. Yeah.
Understood. So I think why we
Indeed.
have Kravata, right? For people to better, have their cryptocurrency. So let's come to the, today's main topic, Kravata. So what is Kravata? Can you explain to our audience in maybe describe a customer journey? If I am a merchant, who wants to receive USDC in my business in Latam, so can you walk us through the whole process? What will it look like?
Sure. So Kravata is an infrastructure company that is providing APIs. So any app, super app, banking app, digital wallet, commerce can offer to their end users stablecoin-based services. So, for example, I will start first with a simpler example. If you are a company and you need to change money between two countries, then you can onboard with Kravata. You can have an account. We have a web app or an API, and then you can swap between your stables and your fiat or other fiat to fiat. But in the middle, we are on-off ramping with the stables. This is the model how we started. And then we extended that model so you can also pay to other countries. So we have third-party payout capabilities. So, for example, you are a company in Mexico, you have bought some products from a company in Colombia. You don't have accounts in Colombia. You don't know anything about Colombia. You only money and you own that money. So basically, you go to Kravata, you send us Mexican pesos, and we pay Colombian pesos to that company. On the back end, we are really on-ramping your money to a stable and off-ramping it again to Colombian pesos and doing a third-party payout. This is how Kravata started. Since 2024, by Q2, we started observing that banks, super apps, neobanks, they want to enter and use the stablecoin rails, but they don't really know how to do it because their compliance teams are old-fashioned, or because they use legacy rails like ACH and Swifts, or because they are too local, they only handle local fiat, they don't have multi-currency accounts, etc. So we started deploying also that infrastructure into their services. So now imagine there is one digital wallet or neobank in Colombia that today what they offer is people can save their Colombian pesos there and pay to others with a QR. Nothing more, just like that. So what we can do to that is if they embed Kravata, this app, we can provide them directly into their app where people can, from their Colombian pesos balance, on ramp to a dollar stablecoin. Usually we use USDC for that product. And then they can off ramp again to fiat. We can also use other stables, but we are close with Circle, so we do USDC. Companies feel like more compliant when they see USDC. So now the user can on-ramp, have dollars, and next day that the dollar is a little bit up, they can off-ramp again to pesos to their balance in the app. But we can also add virtual accounts. So now these users, they will also have under their name with the same KYC they already did in their digital wallet, a bank account number, routing number in the US, and an IBAN in Europe. And we will be adding more countries for that. So now, if Hazel is in New York and she wants to send money to that person, so she only does an ACH wire in the US to that account number, and this person in Colombia will receive one-to-one those dollars into its USDC widget embedded in the app. So now the app can do cross-border payments and remittances. So with the balance that person receives in USDC, they can either do again a payout to a third party in the US, in Europe, or they can also off-ramp it in local fiat again into their balance in Colombia. Or we can also provide them a card. So with that card, they can spend, the user can spend whatever they want, and the balance will be deducted in the USDC. And in the meantime, this balance that remains in the account, we are connecting that on the back end to a yield protocol. So basically, this balance gets yield. So depending on the agreement we do with the client, which is the app, that yield can go from very conservative, like a treasury bond, a public treasury bond, to, for example, corporate bonds, a DeFi protocol. So we can go right now from 4% APY to 8-9% APY in dollar, depending on the option. So this is the whole suite of APIs that Kravata has.
Awesome. Yeah, understood the whole process very clearly. And would like to know about the on-ramp process. So particularly, how does Kravata handle, let's say, USDC to local fiat? How does the exchange process happen? Are you cooperate with
Yeah.
bank?
So one important thing is that in general, we can do stables and tokens, but in particular with Circle, Circle is our investor. So we are very close to them. We have accounts in Circle with the different companies we have. So Kravata has a company in Colombia, a company in Mexico, a company in Chile, and VASP in Poland, and 2 holdings in the US. So basically, we have a structure where we are getting licenses every part we want to operate in the countries where the regulations are clear. In the countries where the regulations are not so clear, what we do is that we connect a third party for the liquidity. But for example, in Colombia, what we do is we have a liquidity. We have some liquidity internally in our books. Why? Because we have, on one hand, in our B2B cross-border payment business, companies asking for a lot of off-ramps. And then with this widget solution embedded in apps, we have people mostly asking for on-ramps because they want to save in dollars. So we can settle both flows. So with the USDC or USDT from one part, from the ones that are off-ramping, we pay the others, and with the others, fiat, we pay the others. So this is about creating our own liquidity book. That makes things cheaper. But when we don't have enough on the both sides, enough symmetry, we need to go to banks. So then we go to banks and we conduct an FX. So we can do, for example, from Colombian pesos to dollar, and then we mint in Circle if we need more USDC, or vice versa. If we need more fiat, we redeem and we do the FX locally. Or with USDT also, etc. So basically, we have a whole team dedicated to the liquidity model. So you can think about Kravata in 4 modules. We have compliance. So we have a compliance team, a module, infra, tech, data science, and of course, a tough lawyer in the compliance part, doing all the onboardings, KYC, KYBs, transactional monitoring, segmentation, and blockchain analysis, and all these algorithms based on network science. This is the compliance model. Then we have the liquidity model, which is the one you are asking for. So the liquidity model is we have a team, operational team, Python, coders, etc. We even have some neural networks connected there. So we can do all the settlements between the on-ramps, the off-ramps, and we can deals in terms of how we can swap from stables to dollar, how we can swap from dollar to local fiat. And that's the flow about. That's the model about. Then we have the model. In this solution that I mentioned you, we have to put wallets to our clients' wallets. We have to provide them segregated wallets. So we have this custody model to be able to deliver that. And then we have the hyperlocal payment methods model, which is basically the ability to do cash in and cash out to third parties via API in the different countries via the traditional fiat rails in the country. So all our products are on top of these four models that are connected in our core, which is basically what we have been developing since 2022.
That's a very well-established team and system. So besides Colombia pesos, what kind of currency are also involved in your service, in your on-off-ramp service?
We are offering dollar, Mexican pesos, Bolivares, Colombian pesos, and euros right now. Versus, and of course, the stables and all the combinations between them. So you can have Mexican peso Bolivar, or you can have dollar USDC, or you can have USDC euro, etc. And euro C we also have. So we have all of those combinations, and in different
Fantastic.
blockchains also. So USDT, we have them in 4 blockchains. We have it in Ethereum, Tron, Solana, and Polygon. And USDC, we have it also in different in many chains. Yeah.
Understood. And what's the latest transaction volume of your like yearly on-off-ramp service?
Yeah, so Kravata has done in 2 years, in 2023, 2024, we have done like $260 million in transactions. This is how our transactional volume accumulated. We have our all-time high, it's some months of 50 something million a month. And those are the volumes here. This is mainly this is on and
See. And as you mentioned, your clients, maybe they're from cross-border merchant. So what kind of type of merchants are in your service?
Yeah, so the of course how we started the business with crypto native clients, so exchanges, OTCs, digital wallets. Then after that we started migrating to more payment companies like traditional payment companies. And the end user are import services more than goods, payroll companies. We have also franchises, so apps that need to pay the franchise, Visa or MasterCard, after their users use the cards. So they need to offer money or to bring money from their treasuries to pay the franchises. This is also something common. We also have lending protocols, so companies that are lending money, but their source is in other country, in the US, for example, they are lending in pesos, so they need to bring the money. We have food companies. Actually, right now we have a food company that is buying supplies in different country where they operate, and so they in different countries, so they need to get the money there to buy the supplies. But in general, and now with Jet, we also have banks and neobanks embedding the solution and neo brokers. So in general, we have 4 segments. So it's crypto natives, fintechs, retail companies, and incumbents. So these are the 4. And in the 4, we have the different categories I mentioned you, subcategories.
Nice. I'm curious
Yeah, very
about
diverse.
yeah. I'm quite curious about the cost, the revenue thing, because you mentioned like you have these teams, but how many people do you have in your company?
So Kravata has 28 persons.
Okay, 28 persons. And what's your needs coming from, like charging fees from customers or like
Yeah, so one thing that is important is that you in LATAM you can have a 28 persons team, a very small burn rate because our salaries are lower than in other places, and the people is still good. And actually, because I come from the best university here, which is the 170 something in the world right now, so it's well positioned. I have access to the talent in the country. So revenues are, yeah, we have generated $2.2 million in revenue in these years, and since we started 2023 to now. So these are how our revenue looks like, which is kind of good for this business. Charging fees in different revenue streams. So that's very interesting about having an infrastructure business. So basically, we are charging for every on and off ramp a fee on the transaction. We have with the compliance model, if you need it, we can add you a KYC. If your business doesn't have a KYC and you need KYC to enable these services, so we can give you that KYC. We're charging in margin from 10 to 30 cents per KYC. We have also the custody, so we can provide you wallets. So that depends on the model. We charge you depending if it's of wallets with small transactions or more AUM but a single wallet. So depending on that, we're charging per AUM or per transaction or per active wallet. But we are always looking to give you the best deal, so it's good for you. We are also charging virtual accounts in case you need them. So for every transaction, this is a small fee, but it's interesting because that enables the incoming transaction to stable. But we know that after that there will be an off ramp also to local fiat usually. So that's why we try to balance both fees. So the whole rail from the origin currency to the local fiat stays very competitive against other options. And we also have fees, a revenue stream for the cards. So for every transaction, we have a spread on the rate if it's not used in dollars. And at the same time, is the commerce paying like in every BIN sponsorship of a card to us. And we have the yield generating product. So basically where we get a small cut on the yield generated by the stables of our users in the balance. But we try to give to the user the majority of the yield because we think it's more about them getting attracted to the product in that sense. Yeah.
Understood. I can tell you are doing a good job. But we have to talk about the competition thing because, payment now is very hard and many players are coming to this field. And in China, there's a saying that like if you start a company and the potential investors will always ask you, like, what if the, Tencent, jumped into this field? So Tencent is China's biggest internet company. And in the payment industry, I think people will ask the same questions about what if Stripe is doing your business, right? And recently we saw the news that Stripe has opened a coin financial account to the merchants in like more than 100 countries. And we see that Bridge is cooperating with Visa to have this card, like crypto card in Latin American thing. So I'm quite curious, like, does it bother you?
Not at all. Mm-hmm. So basically, I think the play we need to do is to partner with them to be able to have their side of the business done with their best technology. And on the other side, we need to be their partner for the local stuff. So basically, I see this business not as a one fits all because the compliance part, the relationships part with the banks, handling the culture of these persons requires local specialization and the boots on the ground. So if you take a look, for example, Citibank left Latin America. So they tried to be here for a while, but they could not be here for at least for personal accounts. For corporate banking, yes, but not for personal accounts. Then Scotiabank bought them. And now Scotiabank is selling the business here again to a local bank. So the thing is that when you get into Latin America, you need to have compliance specialization, local regulations understanding, but also behavioral understanding of the consumers. And then you also will need to have corporate structures all around, and to with that means, but also with the generating liquidity and getting your hands into the informal market also, to understand those markets, because it's the 50% of the market. So I think big companies cannot do that themselves. Just to give you a sense, here is a company that I like very much, which is called Effecti. And we talk a lot. This is point of services all around the country to process cash-ins and cash-outs in cash. So people can pay their services, or if someone sends money from one city to another, they can take the money out from there, or people can buy the lotto with that. To give you a sense, this company right now handles more transactions than the banks in terms of cash in and cash out. So if you are planning just to get in a play with a card, for example, I think that you will take a part of the market, of course, but that's not the big market. So the real competition of companies like Kravata is not Bridge, or is not us. It's the cash. It's informality. It's people buying dollars and putting them under their bed. That's what the big market is. That's where the opportunities are. Not like competing for the 10 users of my similar company in Silicon Valley. So, and the real businesses understand that here. Are the ones who grow. Yeah.
Understood.
Wow, that's a very high level insight. Actually, that changed my opinion on the current competition landscape. My question is, besides the global competitors, so let's go back to Latin. What's the current fintech, crypto payment, startup mapping looks like? Are there a lot of companies in this space?
So not so many there are more than 5 years ago or something like that. I have been 13 years in crypto, or 12 years in crypto. So I have seen how the market has evolved. So basically the market started with exchanges. And then in Colombia, and you didn't have exchanges, maybe one small. Large exchanges are Bitso, Binance, Ripio, Mercado Bitcoin. Those are the 4 exchanges in Latin America. Then you have this Mercado Bitcoin has never get out of Brazil, so it's only Brazil. Bitso started in Mexico, Ripio in Argentina, and Buda maybe also in Chile. It's a smaller one, but it's well known. These guys are starting to enter the other countries. They started to enter the other countries. They had to find out market makers to fill out their books. So these market makers were like the second step, because these market makers are the same companies that were doing OTC trading for crypto arbitrageurs or traders to get the money back, the off-ramps back from the trading activity. So that's how the market has been until maybe 2022. Then in 2022, we started to see more some consumer apps in USDC, Dollar App. There is other called Litio that have been growing for people to save in digital dollars. So this is more consumer oriented. And then There is after that Wenia that came from one of the largest banks in Colombia as a separate company, but it's from the same financial group to offer more crypto options, not only USDC, but more tokens. And there is Lulo, which is very interesting. This is one of our clients. That is a neobank that embedded into their same app crypto. So people can buy crypto there, like Revolut, or Nubank did in Brazil. So I think that movement has started the whole thing. And this whole thing was to show regulators that crypto is here to stay. And I'm calling crypto also stablecoins. Crypto is here to stay. Stablecoins are here to stay. And that now the financial rails will move around that. So other banks, other financial institutions, other fintech are looking how to do that fast, because there are some other groups, not too many, but there are some banks that did teams 3 years ago, like Wenia, like Nubank. So that's where Kravata plays. So Kravata is that player that is coming to make that happen very fast. So we can help them to jump on the stablecoins trend, to have their services, and they don't have to take all the curve or building a team 3 or 4 years later launching. This is what, so Wenya took like 3 or 4 years to launch. We can do that in 6 months or less. So basically, Kravata is a middleware. So we are licensed partner integrations, customizable rails, and white label options, bringing the best services in the world available to your app in 6 months or less. So I think in our opinion, and we are not only tech, but we are bringing also the compliance framework, and we are educating your people. So, and after that, we are building a real ecosystem. The way we get more apps using our API, there is more likely an idea of connecting them after, and that's where the next step will be.
It's excellent. Yeah. And as a question, it's about the all the system that we're talking about now is actually still based on the Visa MasterCard system, right? You need to rely on the banking system to the things. You cannot. Maybe Circle is proposing a network, like payment network, maybe will be independent, totally independent from the original system. But what's your view on that? Like, do you think that in the end, the stablecoin payment infrastructure can be totally independent, the Filecoin, or will the Visa Master will be replaced, or will the whole system is still based on this?
I think the day you can have the farmer receiving a stable coin, and with that stable coin paying for its supplies to get his farm cultivated, then we won't need anything else. The thing is that today we still need to off-ramp. But over time, what I think is we won't need to off-ramp. I will pay you in stables, you will pay the guy in the store with the stables, the guy in the store will pay to the other one in the stable, blah, 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 blah. And when the whole supply chain will be stable, you don't need to off-ramp, you don't need cards anymore. I think that's the way if you want to replace, but we need regulations for that, because the regulations right now in almost every country, and I think all of them, require that you off-ramp for your accountability and for receive a payment. That's something that has to do with also the debate on having local stable coins or CBDCs in the countries, because if at the end CBDCs, you don't need to off-ramp because you are swapping for the government CBDC, but there are other problems related to the governmental CBDC. But I think that's the way. In general, so Visa and MasterCard is seen as something. I think they were, because also entering the game, we will see them for a long time here. They are also building the rails. They also Visa Direct and B2B Connect, which I don't know if you are aware of, but these are like rails they have. I think they are using blockchain, but they are stables. It's just like a layer for information where you can settle transactions between cards, cross borders. So I think Visa and MasterCard are here to stay. The thing is that in economies like Southeast Asia, like Africa, like South America, you still need to deal with informal persons and with unbanked populations and with cross-border transactions that are not passing through cards. So all of that is the niche where is the market. It's not a niche, it's a big market where I think stable coins can play very well.
That's true. That's true. I never thought about before. Maybe the real for you is the cash rather than the bank cards or something like this. Yeah. And you mentioned regulation, so that's actually our next topic because I think we will start with the biggest news this week is the GENIUS Act from the so because all the people are actually talking about it, right? But I'm not sure. Like as an entrepreneur in Latin America, do you care about that? Are you paying attention to it? Will it affect your business or maybe affect the local regulation?
Latin America struggles a lot with correspondent banks. So our banks in LATAM have accounts in big banks in the US. And as I mentioned you before, the majority of transactions that come from dollar come from those banks. So if those banks decide to block transactions, we cannot receive liquidity. And in crypto, in 2023 and 2024, that was the case. The correspondent banks, after the Silicon Valley Bank crash, Signature Bank crash, Silvergate, the correspondent banks started to block a lot of transactions that were coming to LATAM. And the crypto market suffered a lot here because we couldn't settle very well the transactions. And there was a lot of off-ramp demand, but that could not be accomplished. So one reason for that is that the correspondent banks are worried that in LATAM there are no regulations for those transactions. And of course, at the same time, they have the SEC behind them also asking them for all of those transactions. And so with Trump administration, that has changed a lot. So the SEC is more crypto friendly. The SEC is now having a better approach, in my opinion, better approach with the banks. And now if we have some clear rules, at least the LATAM market will know which are the requirements to do a transaction with the US.
That's true.
And the majority of the flows in remittances, in cross borders, whether or not we like it, are with the US. So basically, there is also this BRICS flow that is coming more and more from the countries. Especially some of our countries have just signed some agreements with China, agreements with other countries to do trades, etc. So I think the world is changing around that, but we still depend a lot and in our financial system on that, on our relation with the US banks.
Yeah.
So yeah, I think having clear rules, it will mean more investment in our companies to be compliant with those rules. But I think that's the way to do it. At the end, we want clear transactions and comply with the travel rule and all of those requirements that at the end are made to protect the end user.
Yeah, that's true. But how about the local regulations? I mean, like for example, for Kravata, what license actually do you have for running this business in Colombia?
Yeah, so that's very interesting. So that has changed a lot in the last couple of years because back in 2021, we didn't have anything in LATAM, maybe El Salvador trying to do something with the Bitcoin law, but not so much more. So now, 2 or 3 years later, so 4 years later, actually, now everything has evolved a lot. So we have Brazil with the crypto law, well established, still getting like the very precise regulations part, but with the crypto law, with the digital currency, the DREX, with the blockchain layer, with some government programs led by the central bank, funding DeFi projects and protocols themselves. So the banks are already developing infrastructure for blockchain. That's very, very, very important. I think it's the most important one. in Latin America. Then we have Chile, also very important. They did a fintech law. The fintech law has licenses of financial intermediary, custody. Kravata applied for those licenses. This is very new. We applied this year. We are waiting for them to come back because this year was the year to apply. But this is very important because after that, Chile is the most advanced country in LATAM in terms of regulation, wealth, being part of the OECD, etc. So then we have Mexico already have a fintech law. It's older than the Chilean and the Brazilian one, actually. Then they already have these licenses for transmission, money transmission. They have something that is called the Vulnerable Activity Registry. So if you are a crypto company, so that's very interesting because we also have that. So we can process transactions in Kravata from crypto to fiat. Then you have countries like Bolivia where crypto was forbidden, officially forbidden. Now it is not. They took out that prohibition and now they are regulating it. We have Peru that 2 weeks ago gave authorization to the largest bank in Peru to custody and sell digital assets. I have been in touch with them. We have been talking a lot. And that's huge because that's whole advanced. And then we have Argentina, which, the whole Milei stuff happening and being more open to these kind of markets and pushing a lot on regulation. And then, of course, we have Salvador did something very interesting, which is to open license for a VASP license. So now in Salvador, a lot of companies in LATAM are getting the VASP license of Salvador. With that VASP license, you can operate like, let's say it's similar to if you are a VASP in Europe, you have like similar superpowers. So it's very interesting because now there is this hub. And there is also, of course, Bermuda, which has so a lot of companies here are also getting licenses in Bermuda, different types of licenses according to what it is. So there are 3 licenses you need to look at it all the time when you do a business in crypto. One, if you are going to emit a token or a stable, so a emission license, it can be either in Bermuda, now in Salvador, etc. The second one is if you are going to do on and off ramps conversions. So that one is more like a VASP license. And what we see is that the majority of countries are starting to do some type of procedure or license so you can get the permission to do that or registry. And the third one is if you want to do payouts. Then that's a money transmission license, which are common or electronic money licenses in Europe. That's the name. So the countries are also getting these licenses. Countries have these licenses available. So depending on in which layer you are, you need one of those 3 or the 3 or 2 of those 3. So in Kravata, we are having, of course, the on and off ramp licenses. We are getting the money transmission licenses, some parts. We are not applying for now, at least to the emission ones, because we are not having our own stable or token. So we need more on the distribution side, the transmission. Yeah.
Got it.
Okay.
Got it.
Yeah, now it's naturally come to the next question. I'm curious about how did you manage to establish your relationship with all those financial institutions and the regulators? I remember you said in your previous interview that you wear 2 hats. One is in Web3 world, and another is in traditional finance world. So they are totally different. Would like to know more about that.
I think so. The Web3 world is more open. You can go to conferences. You can meet Vitalik one day and just talk to him, and it's a little bit easier to talk to Vitalik than to talk to the president of a bank, honestly. So in the banking sector, you need first some openness. So you need someone to open the doors for you if you are not from that sector. We, for example, have as advisor the ex-vice president of Banking Association. We have people to entrust. We have because I used to work at the government also. I used to have a high C-suite job in the Ministry of Education. I have contacts. So with the presidents of the Banking Association, with people that is working on the government that can intro me to the finance persons or directly related to banks. But it's in-person meetings, lunch, having lunch, getting the trust, showing that your company is managed by mature persons and not by 25-year-old techie guys, but by people that has some sense of the importance of compliance and risk and business oriented. This is very important for them. Our compliance officer is very good. He's very mature. He's a very important and a key part of the relation with banks. We actually do events of risk. We sponsor events of risk. We sponsor compliance events. Even with the United Nations, we have done events where we invite banks or where we are speakers. You need to position, at least in Kravata, we position Kravata as a most compliant company they can get on the table locally because that's what is most important about them. You need to understand that bank, they have a big business of credits, loans, and then transactional businesses usually are small. So these businesses of payments, cross-border payments, crypto are mostly seen as transactional businesses. The revenue comes from on and off ramp, from tokens movement more than from loans. So basically, you need to convince them that they are not risking the big business because of this small transactional business that comes with these new technologies. And the way to do that is how you can protect the whole business with standards, with compliance procedures, with risk management, service levels agreements. And this is what we are experts at, building all of that trust. But this takes time. But now that you can build with some of them, the others come easier because they know you're already there. For Kravata, it was a very big milestone to embed a neobank, for example, because this neobank has full banking licenses. So they are supervised and we had to show them. Also to embed, to be able to work with some of the largest banks. It's are big milestones when you get to that, when you pass their compliance.
Got it. I'm curious what question they were asked, like when they decided to collaborate.
Oh, they ask everything. They ask even what is the risk for their users. For example, one question, what is the risk of their users of having USDC? So you need to start by telling them that what USDC is. So it's backed by dollar. The dollars are in these banks. Circle buys these treasury bills, short term, etc., with this money. You have Deloitte coming to do audits on Circle. You have, but all of these names, they know those names. They don't know Circle, but they know Bank of New York Mellon, they know BlackRock, they know Deloitte. So you need to approach them with this kind of thing that they know, but they still think it's risky to depeg. So you also need to, they don't really know how blockchain analysis work. They have never seen a blockchain explorer, for example. So you need to teach them on what a blockchain explorer is. You need to teach them that the blockchain explorer is not anonymous anymore, like so anonymous, because it has nodes on it. You have to teach them that the wallets also are in blacklists, that there are softwares like Chain Analysis, TRM Labs, etc., that are doing their job on gathering those lists and you can analyze them. So a very usual conversation is how we show them our compliance process. Actually, sometimes they want us to be their compliance providers. So that's why we're even thinking that separate that model. But the thing is, If you become the compliance provider of a bank, you cannot do transactions with them because you will be the judge and the part at the same time. So you need to choose which deal you prefer to offer them. Yeah. So that's the whole story about banks.
Yeah, that's very interesting. I mean, I know that like a lot of people in the banks, they don't know cryptos, but never thought about to which level to really understand this world. Okay, I think we'll move on to our final part because you mentioned before that you got like your investment from Circle, and I know you also get investment from a Chinese crypto investors named IOSG, right? I think Chinese people are really familiar with that. I'm quite interested. How did you get a connect with them? Yeah.
Yeah, I met the IOSG team because of an angel of us, a person that had a DAO called Angel DAO. He invested in us and he introduced me to the IOSG team. But that had the good coincidence that DEF CON was in Colombia in 2022. You may remember the merge announcement was in Bogota. So that was a huge event here. And I had the chance to meet some of their team in person here. At the same time, we already had a call before virtual. So that's how I met the IOSG team. I think I remember when we were talking, they told us we were their only non-Web3, fully Web3. We had a very good conversation. We explained them a lot about why in LATAM it's maybe right now the right timing for Web 2.5, for embedding services into apps, for having payments, more than doing, for example, Web3 games or protocols, or because here the market is ready for that. It's not yet ready for people to get a MetaMask entering your finance and getting or a liquidity staking, an eigen layer, etc. There are not so many persons here that understand to do that flow. But the other flow, yeah, people buying stables, selling stables, having payments, having savings, that's the right timing for that. So yeah, that's the way we think that Asian VCs appreciate underpenetrated markets and capital efficient growth. And this is what Kravata with the infrastructure play is doing to avoid market fragmentation in Latin America.
Yeah.
That's a good point around that.
How long does it take for them to decide to invest in your company?
Oh no, that one was fast. 1 month or something around that. One was fast.
Yeah, that's quick. That's quick. Cool. I think you mentioned to me last time that's still very difficult for crypto companies to seek investment in LATAM. So you're also looking for Chinese investors or Asian investors for your next round.
Yeah. For our next round, we're definitely looking for Asian investors because of two things. One, we think that Asian investors understand very well the LATAM market because Southeast Asia has similar particularities. And I think it has one step further in companies. So here they can advise on us on how Asian companies have been doing. So I think this is very interesting. And the other thing is because there is a lot of potential right now with everything, how the world is changing on all the commerce and all the transactions that are connecting both worlds. I think this is growing very fast. This is getting to a lot of deals done, and having connections between Asia and LATAM will be very important for the next generation, for the next 10 years. Yeah.
Yeah. And after you closing the next fundraising round, what will be your most priority to?
My most priority is to get our widget integration embedded into apps of around 100 million users. We won't get LATAM to be connected to stables in the apps they already know.
Yeah, will do. So the last question I care about is what kind of suggestions would you offer to like Chinese crypto or fintech companies the issue entering the Latin market?
I think you have local partners because you need some understanding of the local market. You need the rails, you need the regulatory approach. So that will be the first thing I will mention. I think also the second thing is maybe to understand that there is a lot of currency volatility and that you need to understand the drivers from that they are not just replicating the models from Asia. And if you want to have a long-term defensibility, maybe infrastructure is more defensible than apps here. Apps can be more challenging. B2C approach can be more challenging because you will need to really understand the behaviors. So, and I think also it depends on if your strategy is cost or is value added. I think Latin American people sees that depends on the country, but for example, Chinese apps like Temu, like these kind of apps, we see them as cheap ways of buying things. Or for example, like cars, Chinese cars or electric cars or cell phones brands, maybe not Huawei, but others. So we see them as so depending if you are getting into LATAM with the cheap or if you are getting with the top tier one quality offer, that we also see some Asian companies doing that, of course, like Samsung. But depending on which one of is your play, you will need to tackle the market very different. The cheap play is you need to know and understand the informal market. If not, you're not tapping the real market. And the other one, you really need to seed on these wealthy niches, groups, that you need someone to introduce you to that. In both parts, you need someone, some partner, some player. Doing this alone here in LATAM is difficult because relations matter a lot. Maybe there are in most advanced economies like Europe, like US, you can get into a conference and talk to important persons like easy. Here, there is a lot of lobby, etc. you need to do for getting to those persons. So I think that because at the end, because there are fewer, give us a call. We can help you.
I think I will want to give you a call.
I will do that. You will be the first go-to person for a lot of Chinese startup.
Yeah, I think you should give us a call. I can intro you to people, to an association to get you here. Also, some tourism around.
Cool, no problem. Okay. Oh, come. Last question. I think that's a question we will post for every guest speaker in the future episodes. Is like, because we will interview a lot of people in the future in the payment industry. So, do you have any recommendations that you think we should in the interviews, like people, project, or do you have any questions, like your question that you want to be answered by someone else? So maybe we can take them down and we can ask other people about everything.
Oh, yeah. I have many questions for your market.
For Chinese market?
Yeah, but, I would love, for example, to understand how Alipay did.
Got it.
How Alipay has been growing. What I know they have, for example, a blockchain for commerces. I'm very aware of how they have evolved, and I think that's something very interesting for us in the, let's say, Western, because we don't really know those cases very well. We have some idea, but we haven't heard them, or at least this generation of entrepreneurs. And I think right now it's very important to understand those dynamics. And not only Alipay, maybe other companies that maybe are not so big, but in the middle, but that are doing very well. So, for example, I know the guys of Reapp, these kind of guys. I think that those are very interesting companies that people here in LATAM should be aware of and know and understand what they're doing, because they are doing very interesting stuff. And on our side, Yeah, I can. I see you. I know many people in I'm doing crypto in the different areas from local stable coins. I can intro you to these persons, or also on the B2C apps like Litio, etc. I can also El Dorado. They are all my friends, so we can talk to them easily. Or also, if you want more on the infra side, either if it's blockchain based or if it's more API based, we can also have find something. I think the banking side, what maybe having a podcast about what banks think about stables.
Yeah, that would be very
So,
interesting.
and also on the Asian side,
Yeah.
what Chinese Hong Kong banks, for example, think about stables. I don't really know.
Yeah.
I don't know if the situation in Hong Kong is like here, that you have some 2 or 3 banks that are interested and the rest they don't care, or if it's or yeah. So these kind of questions I think that are interesting. And also I think the upside of all of these is to understand what traditional companies think about. So a large e-commerce or a large food company, retail company, like the Asian versions of Walmart, what they think about stable coins, these, and if they are willing to use them or not, or they just, what do they use today for moving their monies? I think that that's at the end what helps our ecosystem to understand where to grow.
Nice, nice. You give a lot of good ideas about our future episodes, and actually, this is what we also want to build. It's not just to focus on crypto market because I would say this industry that travels very quickly, yeah. But in parts of the world and in other parts of the industry, the traditional industry, we can be reached. That's how the plays role in that. So very thank you. I hate to say goodbye, but that brings us to the end of this interview because I think it will take up a lot of your time. So thanks again for taking your time to share your insights about the LATAM payment landscape and also get us to know about Kravata. So for audience who are listening to this episode, so if you're an investor, who are looking for a LATAM portfolio, or if you are a business that trying to do, to expand into them, I think you can go to Philip, or you can come to us to build connections. You can find our contact at the bottom of the screen. And really thank you, and Abby, thank you, and I think we can wrap up here, and we can see you next time at our 2 cents.
Thank you very much. Have a
Thank
good
you.
one.
Yeah, you too.